Today, we're going to be looking at what is monetary policy. So we're going to start off really basic. And then as we progress through the series, as usual, we'll get a little bit more advanced and a little bit more advanced. And eventually, of course, you would know as much as you need to know in the markets. Of course, there's always much more to learn. But as long as you nail the basics and you nail the understanding, that's pretty good. So let's get right into it. So we're just going to run through this slide very quickly. And then, of course, as we've seen before, we're going to run over some examples in the next couple of videos. So in the markets at the moment, I'm sure we all know already, there's always a theme. And the theme at this given stage, of course, 2022, is monetary policy. You know, which central bank is hawkish, which central bank is dovish, which is adding QE, which is stripping out QE. And that really depends on where the currency goes. You know, you tend to see, which we'll get into it in a second, central banks really is what the drivers of where currency ends up going. Of course, there's other factors, geopolitical events. Right now we've got China, Russian-Ukraine war. We have recently had COVID. They're all drivers. They're all macro drivers globally in a lot of economies. So let's get right into it. And let's just start from the basics, of course. So what is a monetary policy? So the aim of the central bank is to control money supply within the system. It's honestly that simple. That is literally the aim of it, is their mandate. That's what their job is. Generally, the more money in the system, the less it's worth, thus creating less demand for the domestic currency. So this is what we've been speaking about, multiple times, especially when we look at oil as the supply and demand aspects. Is the currency in supply, or is the commodity in supply, or is it in a deficit, or is it in a lot of demand, shall we say? So generally, the more money in the system, the less it's worth. It's pretty simple, right? I always give the example of Jordans or Rolexes. If there's a ton of, let's say there's 100 Rolexes in the world, and then 99 of them just suddenly disappear, and then 5-10 years later, what's going to happen to that price is going to be skyrocketed from what it has been. So a hawkish central bank, which is raising interest rates, is positive for the domestic currency, right? Because a hawkish central bank, its aim is essentially to strip out money out of the system. The economy has expanded too much, and its aim is just to slow it down a bit. And a dovish central bank, i.e. cutting rates, is generally negative for the domestic currency. So right now, the prime examples, of course, is a real big divergence is the US Fed, and of course the Bank of Japan, so the central bank in Japan. Those are two massively contrasting economies based on monetary policy. And as we all know, the Fed is super hawkish at the moment. And just look at what's happening to the DXY and the dollar. It is climbing like crazy. And then you've got the Bank of Japan, who is super dovish, and they're looking to hold rates for a bit longer, keep money within the system, and just trying to support it. And we all know just look at what's happened to the Japanese yen since then. So what is a dovish monetary policy? So a central bank is used to help support the economy, or a dovish central bank. You would tend to see the central bank cut or lower interest rates and add stimulus into the economy. As I said, this is generally negative for the native currency, and you will still see a shift from buying to selling. Most recent example would be the Bank of Japan, who has had negative interest rates and a lot of QE, which we'll get into in a second, what that is. Since Jan 2021, the yen has fallen over 26.75% against the US dollar. And that just shows you the power of what a dovish central bank has, is that the currency just falls through the floor. And it just continues to fall until we see some sort of turnaround fundamentally with the economy, or we see some sort of, a shift in the dovish bank, which will have to happen either because of inflation or because of an economy that's expanding far too quickly. So that is literally how simple dovish monetary policy is. As I said, we're going to start real basic, and we're going to add some more stuff into your arsenal when looking at policies within the economies, right? So this is what a dovish monetary is. The best example at the moment is, of course, the Bank of Japan, and then second is probably the euro. As we all know, the euro has not been even stepping forward to even hike interest rates, and their inflation is out of control. So that is what a dovish monetary policy is. And it just shows you the power of pairing those strongs on those weaks. And then what is a hawkish monetary policy? So hawkish policy is the aim is to slow down and expand an economy. As I said before, this is a contrast to a dovish bank. You will see interest rates being hiked or risen and liquidity being stripped out of the market. As I said right at the start, a hawkish bank or a hawkish central bank is positive for the currency. However, please note that a currency doesn't always strengthen during the times of hawkish behavior. And that's very, very important to note. Are they hiking for the right reasons or are they hiking for the wrong reasons? The right reasons would be the economy is expanding, labor market's very good, GDP is fairly decent, just the overall, retail sales is good, all the internal metric fundamental data is also very good. And of course, as usual, the inflation is rising anyway. So that would be, if a central bank hiked interest rates or tilted hawkish with their language, which is, of course, as I always say, whenever you see some sort of, whenever you see the types of news and the types of meetings, always listen to their language. So have they tilted hawkish? And if that is the case, you generally see banks and investors stepping forward and pushing the currency higher. Or are they hiking for the wrong reasons? I.e., they're hiking purely because of inflation. Their growth is not good. And, it is just going to, cripple the economy. Because at the end of the day, interest rates are being risen, which, as we all know, that means mortgages get more expensive, loans get more expensive. So their aim is to slow down that economy. But if the economy is already slowing, why are they hiking? Why are they hiking interest rates? The only reason they would be hiking is because they're hiking because of inflation. And of course, the best example right now is the Bank of England. We all know the Bank of England is in their hiking cycle, and you'll tend to see a stronger currency if they're hiking for the right reasons. But as we all know, if you've been taking note of what we've been saying in the videos, they've been hiking for the wrong reasons, and the complete opposite happens. It weakens the currency even more. And a recent example of a hawkish central bank would be the Federal Reserve. So the Fed, they have started to hike rates and promise to hike more in the future, which is very hawkish, right? Their language that they're saying is super, super hawkish. And since the Fed tilted hawkish in June 2021, the DXY has risen 14.36%, which is a lot. It may look, if you just look at the DXY chart, it doesn't look like, it looks like it's a lot more than that. And yeah, it just shows you the power of what the policy rates can do. As long as they're hiking for the correct reasons. The dollar is obviously being bid up because of external factors as well. That's also something to note. But if you strip that out anyway, the dollar should have risen, maybe not as fast and as aggressively, but it would be up anyway since June 21. And then what is quantitative easing? So we've all seen this phrase before, QE, and it was introduced during the 2008 financial crisis. The aim was to support the economy during times of unease. The most recent example would be COVID. Everybody within the US pretty much got $1,000 just to support the economy. That's a form of QE. The UK, we got furlough. That's quantitative easing. So it's just literally a big sum of money or a big chunk of money that's being bled into the system to support the economy during times of unease. COVID being one of the most recent, and then before that was the financial crisis of 2008, with mortgages. Typically, you see central bank lowers interest rates on savings and loans to stimulate the economy. So this is, of course, a very, very dovish move from a bank. If they're adding QE, they're adding stimulus into the economy. But remember what I've said about that supply and demand aspect. They're adding more supply into the system, which for investors and traders at banks, it tells you that the bank is very, very dovish. They're not very constructive on the economy. And when QE is introduced, it's also seen alongside a dovish bank, as I've said. And when it is reduced, it's also seen alongside a hawkish bank. 9 times out of 10, that's what tends to happen. But let's say, for example, we see, I can give you a rough, very vague example, whereby right now we have the Fed, very, very hawkish. They're taking money out of the system. They're trying to unwind their QE, trying to take that money out of that system. And then you've got them hiking interest rates. They're hiking for the correct reasons. The economy is expanding. Also inflation's rising. But then suddenly they introduce QE. And investors would see that as, whoa, why are they doing that? Maybe there's some sort of issue globally that's causing that. Maybe another, I don't know, something could happen, a world war, and then they'd have to introduce QE, right, to battle everything that's going on within the economy. And then, then that would be followed by more QE, and then the bank would have to hold rates and then potentially cut rates, and then it goes into that death spiral of a very dovish bank, and then you'd see the currency crumble off the face of the earth. It all depends, of course, if the market buys dollars in times of this unease, but this is just a very vague example. And then, of course, on the flip side, it could be for example, the Bank of Japan. They got a lot of QE, and then they start stripping that money out of the system. Then that would tell the market, well, the Bank of Japan is stepping forward hawkishly, potentially for the correct reasons. And then we start to see the bank or the yen basically rally. Then you'd have to look at the month-over-month data, the internal metrics, just to make sure that they are hiking for the correct reasons, or tilting hawkish for the correct reasons, of course. So that is all I wanted to cover on the basics of monetary policies. This is literally all you need to know. This is the basics. Of course, there's a ton more that you can learn. That you could look at, for example, we'll look at the dot plot. We'll look at the dot plot and what that means. We've seen a lot of examples last year of the dot plot moving more and more hawkish, that followed by higher rates or high bond market rates, or the yields. And then that was followed by a stronger dollar, of course. I'm sure we all know that already. But yeah, that's all I wanted to cover on monetary policy. Nice and simple, nice and easy. Once you get your head around it, it's pretty good. So that is monetary policy. I'll see you on the next video.